Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Our sponsor Blue Guardian is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and over trading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
Hey, what's going on, guys? Let me know if you guys can hear me. It's Brinks Trades coming to you live with another week of breakdowns. Again, if you have any issues hearing me, let me know. I've been getting some lag on my end from the stream, so just let me know if you can give me a thumbs up in the chat, or just to let me know audibly if you can hear me. And it's clear, it's not breaking up. Okay, cool. So what I want to do is go through the weekly breakdowns. Obviously, you guys know who I am. If you don't know, this is your first time watching. My name is Brinks Trades. I'm a day trader. I've been doing this for it'll be 10 years coming up in March 2015. My main markets that I do the analysis for Trading Nut podcast, and obviously my own page as well, are the indices. So if you think NASDAQ, you think NQ, ES, Dow Jones, those are going to be the main ones, right? And so again, I started out in Forex, really made a shift of gears to go to the indices market. And even with the indices, I still trade the currency aspects of indices, and we'll talk about those and break those down in the stream today. But again, been funded, again, same story as usual, been funded a few millions of dollars in prop capital, both within the Forex and the indices space. So, every day I'm just trying to get better as a trader. So what I usually do here is break down, again, the indices and the currency futures, right? And so this is really just becomes a space where we project what we think is going to happen for the last week, and then kind of review the markets for the upcoming week. If you guys are in my mentorship, so I'm doing a mentorship live on YouTube, and it's on a weekly basis. On Sundays, I just upload one video. And I decided to do this one for free just because I wanted to give back to the trading community. You see a lot of trading people and teachers and mentors really just be trying to charge thousands and thousands of dollars for information that, they either A, don't know how to trade themselves, or B, they just, saw it online and just tried to put it out to the masses. So I really wanted to do something that gives back. There's a lot of people that could, really change your lives with, this type of information. So if you subscribe to my YouTube channel, again, you can find me at brinkstrades.com. It's a weekly chat. It's going to happen every Sundays, around 2 or 3 p.m., where I just kind of break down, again, my strategy and kind of teach, the theme for that one is going to be the Forex markets. So it's going to be more currency based driven. So if you think Euro USD or Euro futures, that's going to be the overall goal for this. But that's going to be, again, every Sunday, there'll be a live class going for an hour. So it's a slow mentorship, and it's going to eventually just culminate in giving at least one strategy that I use. I use multiple strategies when I trade the market, but one strategy and way to look at the market that I think can benefit a lot of people. So yeah. So let's hit these comments. Okay, so Tony says, I can hear you. A&T says, hi. Grand afternoon. So what I want to do now is I really just want to go through dollar index, and I want to talk a little bit about what happened last week in the market and what we can look forward to this week. So this is not going to be a live mentorship. I'm actually out of town right now, so I'm not live messaging. This is not going to be a long video because I'm out of town right now, so I don't want to spend too much time going through these charts. But I think some big things can happen over the next couple of weeks. So I just wanted to make sure that, again, I'm putting my ideas in the market. People can look at these and kind of prepare for the next upcoming week. So if we look at dollar index, again, if you understand the dollar index is the main driver for indices and currencies, dollar is king. So if we understand where dollar is going, we should be able to kind of see where we think the market's going to go over the next couple of weeks. So if you look here, we had a target of last week. We wanted to see the market really hit this fair value gap here, the CIVI. And this was our main target for last week. If we break this down to the weekly time or the daily time frame, there was just a couple levels that we wanted to see hit. So Tuesday, Monday. So coming into the week, we wanted to see the market really take out this high and these relative equal highs that were sitting here, which the market did come out and do. It took those out and then really trade into that overall fair value gap. This is that weekly fair value gap as presented on the daily time frame. So we saw all that happen. We took buy side off of these highs, these relative equal highs here. I'll draw those out so people can see those. Right, we traded back up into this gap. So what I want to see in here now is these are kind of one of the situations where you have to sit on your hands and wait for the next move for dollar to present, hit a long-term target. So what I'll be looking for is one of two scenarios to happen. Is I want to see how we respect this fair value gap, right? And right now we're expecting consequent encroachment of this. So the thing is, we could see a couple different scenarios play out in the market. We could see over this week price trade back down into, oops, let me get rid of this. We could see the market trade back down into this fair value gap here, or down into the secondary imbalance here, right? If that's the case, then this could just be a counter trend week to set us up to continue to go higher. My ideal setup is that I want to see this kind of break out of this fair value gap here, and then really reuse this as an opportunity to use this as an inverted fair value gap to really run these highs. I think there's a lot of liquidity up in this area. When we broke structure here, we didn't really take out these highs by really testing them before running down. So I know there's going to be a lot of buy side sitting up in this range, right? And so again, when you hit a major objective like this, or you take out a huge level of liquidity on the weekly time frame, then you have to kind of let the market give you the next step. And that could be rejecting from here and trading here, where we would buy up like this, or something like this where we invert this fair value gap, wait for the retest, and then continue to take things higher. And looking at the buy side level sitting here at 104.25. This very small imbalance here at 104.47, or again, these highs that I talked about previously. So really just kind of have to sit in our hands with dollar. But again, I want to say, if you put it again, gun on my head, right, I want to see a bullish bias, right? So ideally I'm sitting here and I'm waiting for opportunities to go bullish. But again, the fun part of this game is we don't know if this will come as a result of inversion or retesting of this old gap here, right? And so ideally, I would think best case scenario, I want this to invert on the way up, but we don't know yet, right? And we're not really sure what could happen based on that. But again, I'm leading bullish. So I want to hop to, and even if you look at the daily time frame, we're already trading above that consequent encroachment, and we came back into it. So that could be a good sign that we could come a little bit lower and then go higher, use this as inversion, and then, look to continue on to these higher level liquidity levels here. Again, let me write that down for buy side liquidity. And then let me also make this smaller so you guys can see this. So again, it's kind of what I'm thinking here is I'm still bullish. There's really no reason to be bearish at this point, but it's just, are we going to use this gap as the reason to go higher down here? Boom. Or are we going to invert that gap that we saw? So I'll be watching both scenarios to kind of see what plays out. Let's mix things up and let's look at Euro futures, which is, again, it's going to be the same thing as Euro USD. See if there's any really like kind of opportunities here. So last week on Euro futures, or again, if you're a Forex trader, Euro USD, it's going to be the same exact chart, just a little different. Obviously mine is marked up because I look at the Euro futures more. So again, on Euro futures, we saw a couple things that we wanted to see. We wanted to see price trade back into this range here and then fall over. We didn't get that, right? And so just as a pro tip, when you look at things at a weekly time frame, let me hop back to the weekly. The minute that we really took out this structure here and traded below it, there was a really good chance that we weren't going to come back up here again. We didn't fully close below it, but when we did fully close below this candle coming into the next week, it kind of let me know that we probably weren't going to get all the way back up into this gap, especially along with the volume imbalance that's sitting here at what level is this? This volume imbalance is sitting at 1.9636. So because we gapped down, there's a very strong possibility that we weren't ever going to get back up into this level to go down. And so sometimes you're going to have situations where your overall target gets hit, which was this, but the pullback level, or the area that your ideal level to sell at, I guess, in a downtrend or buy in at an uptrend, just doesn't get hit. And so you got to learn how to be flexible with that. So coming into the market, I think on Monday, we just started to see downward, just pretty much straight price action. So again, in addition to knowing that, you also have to kind of know when you're just in, it's called a market maker sell model, and you're just continually hunting for sell side liquidity. And that's really what we got right here, was us just running straight to this level without a great pullback level to get in. And so there were a couple opportunities intraday, and I was able to kind of capitalize on those. This was the trade that I took on Tuesday. And this was beautiful because literally, like, this trade hit in 30 minutes. I was actually driving somewhere, and entered into the position after kind of like I was at my terminal. I had to leave somewhere and entered into the position while I was driving. When I checked my phone, literally, I think I was out of the trade in like less than 20 minutes. Yeah, 15, 5, 10, 15, 20, maybe 25 minutes max. But again, this was, I think, for like a $2,000 or $3,000 gain. So really good overall setup. If you're one of my students, you can kind of see the probably the reasons for entering into this trade here. This was a New York session trade. I usually only really trade New York session. So there was a good couple opportunities to really hop in on positions last week, heading to that target on the intraday level, just not in the weekly pullback level. So ideally, we would have wanted to see weekly pullback to a higher level time frame for it to continue to go on. So going into this week, again, right, very similar to dollar, we hit a huge target level. We took out the sell side liquidity here, and we really took this level out, right, and tapped that level there. So ideally, there's going to be a bunch of sell side liquidity sitting below that low. Right here. Where's my icon at? Right there. There's a bunch of sell side liquidity sitting underneath this low that we just tapped by taking this out. So because we're still in a very strong downtrend, right? We did not take out any kind of like weekly or daily swing low points, or swing high points. There's really no reason why we can really project this thing to continue to go up. And so ideally, um, what I want to see is this continue to run lower. And again, it's only because we don't really have any other existing signs of bearishness, right? It's all, I'm sorry, of bullishness, right? We don't have any broken structure. We don't have anything else we can really use to frame as something that's going to transition up into an uptrend other than this, strong bullish candle, which potentially could be used as an order block, or price could potentially run higher. So there's a couple levels that I'm going to be looking at going into next week. Ideally, best case scenario is we're going to run to that low, or run to this high at 1.898, right? And then continue to drop lower, look for opportunities for bearishness inside of this gap. That's going to be the major level that I'll be looking at. But then also I want to see what happens if we get up here. And these are going to be the two levels. And there's a reason for that. That second fair value gap is very close to that volume imbalance that we got a couple days ago, or at the beginning of the week. So ideally, we also have, this being a premium wick, right? That gap, that daily gap kind of lining up with that. Would not be surprised if we did something like this, where we opened up, ran up, and then dropped like that. I could see a world where we do that. But really, if you go back down to that daily time frame, that fair value gap, this one is going to be very key, because if we invert this, we most likely are going to continue going up, at least into this range. So ideally, based on what I see here, I have to go with this this bias here that we could potentially trade into this, and I'll be looking to continue to sell off. If we invert this gap, then it could be, a couple more days, or a couple more weeks before we get back into this range and look for our second opportunity really to sell off. So that's what I'm looking at on Euro futures on like a higher time frame level. But there's just a couple of things here that I don't like. I don't like the buildup of sell side liquidity here via trend lines. I'm sorry, buy side liquidity here via trend lines. So that's something I'll be keeping an eye on. I think, again, if we invert that daily fair value gap, then there could be a reason for us to continue to go higher. So I'm really going to be watching this over the next couple weeks. But to be honest, this looks very heavily bearish. And there's the opportunity here for this to continue to keep going down. So that being said, let me move on to Euro or pound futures. And we're probably going to have very similarly a very similar bias here, because these things are related. So if we take the cameras off of this, or take the indicator charts off of this, we had a couple of things happen here. So we formed, this is our order blocks here and here were violated, but when we ran through these lows, we also took out sell side liquidity at the end of this low here, left this huge balance price range where we had upward buy side motion and then sell side in the same space. So ideally, what I would like to see is this continue to drop. I also kind of see this trend line here, right, which could be telling us that there's a buildup of buy side of sell side liquidity. I don't really buy and sell off of trend lines. I just kind of use them to kind of mark where liquidity is going to be at. So ideally, a couple other things here that I'm seeing is just these wicks off of this area, how we grab sell side there. So ideally, if I had to guess what I think is going to happen this week, I would like to see the market run back into this gap again and really give us an opportunity to sell off. So just to draw that out. Actually, I'm going to just get rid of this altogether. So because, again, we took out this low there, would not be surprised if we continue to run down. think the stronger case for this will be made here. Once we take out this low, it's swing high. It's a very, very prominent swing low point. I'm sorry. So ideally, I would like to see this continue to run down. We also took out this swing low here. So to me, that spells the idea that we're going to potentially go down. So if I had to guess, I would want to see us do something like this the upcoming next week and find a reason to attack that sell side low. We might not get as high as this volume and this fair value gap, this CIVI here, but ideally that's what I'm looking for. Going back to the comment section, shout out to the entertainer. He said greetings from Amsterdam. I already said ANC high, so shout out to you guys. And again, find me on social media, subscribe to my YouTube channel. I'm always down to chalk charts, so I definitely appreciate you guys giving me your time on a Sunday before the markets open up. So that's what I'm looking for on pound futures. It's really just a continuation again of this bearishness trend. We violated this major swing point here, so to me this looks like this could be a CIVI / inverted fair value gap. It's a busy price trading back up into this range and then continuing to fall over. So we'll be watching that one again. Let's go to NASDAQ. A couple of things here. NASDAQ is still kind of looking tricky because we want to see all-time highs get retested and remade. Again, if I had to draw a level that marks the buy-side interest or like the liquidity that we're trying to hunt after, it would be this level right here. So that's the number one level that we're trying to hit. However, we traded back up into this old fair value gap here, right? And so again, this is very similar to the dollar, right? And once we hit a major target, we have to wait. We have to see if this is going to get inverted or if we're going to continue to run through this in search of higher level liquidity. And so we had a couple of things here that I think are interesting. First ones, we traded through this gap, mitigated it completely. The bodies line up with that high of that weekly fair value gap. And then we rejected, right? And so what happened after that? We traded back up in this range, still respect the concept of encroachment. And the next day, again, still respect the concept of encroachment. If we hop down to the 4-hour time frame, this is just a mess. This is just choppy price action, up, down, right? And so ideally, I would like this to keep going higher, but I need a reason for this to continue to go higher. And I don't really see it yet on the 4-hour time frame. We don't see any inversion fair value gaps. We don't see any PD or liquidity markers violated. So it's just chop, right? And so kind of just have to wait and see what's going to happen. If I had to guess, I would want to see some level of liquidity low ran, which could be this low down here, in order for us to continue. Sheesh. You see this level, see this price continue to rise. Something like this, right? And then, so if I had to guess, that'd be something of what I would want to see this week. So somewhere down to this 20,326 level and taking things higher. Again, it might not always play out like this, but ideally what I'm trying to see is this market really continue to go higher. But the safest scenario would be for us to kind of wait for this to get inverted, right? So us to break out of this, have a clean break outside this fair value gap up here, and then use this as an inversion to continue to go higher later. So that's kind of what I'm thinking for NASDAQ. If we look at ES, again, this is a very similar situation, except we ran out last week. We ended up running out the all-time high, I think this was. So Yeah, so we ended up running out this all-time high here. We respect the consequent encroachment on the dot. So ideally, this is probably going to be a situation where you're going to want to sit on your hands, and you don't know which way this is going to go until when you get a little bit more confirmation on this. This will be your ideal target if we continue this bullish trend. Again, I don't like the fact that we are resting at, I think, Thursday's consequent encroachment. So, but at the same time, we're also respecting the bearish wick here too. So ideally, this is kind of, again, a toss-up, and I don't like toss-up trades. I like having stuff that's more exact and more reasonable. So if I had to guess, there's a couple levels of things that I don't like. We ran out these highs. We traded the consequent encroachment. This could be trading back into the range. Looking at ES again, another thing that I don't like here is this buildup of sell-side liquidity via trend line. That kind of sticks out to me as an opportunity for us to continue to run bearish. Again, I'm constantly asking, where's the money at with our, in the market? And if I can make out things like this, then it's just kind of a very strong case that we could do something like this, where we run these old highs and then completely fall over. So again, that'll be something I'm watching for going into this week as well. But I'm not really eager to take a trade unless this bearishness consolidation really sorts itself out. US30 is very much the same way, I think. So we're trading pretty much near all-time highs. We actually took out all-time highs. So coming into next week, this is what I'm going to want to see, is for us to what I want to see is for us to run. And we're pretty much trading at an all-time high. I think I'm probably going to tell people to stay away from this. Since we ran this old high out here, we technically did take out a swing. I guess this is just a lot of consolidation and chop. And to be honest, I'm not as excited looking at the indices this week for this. I mean, this is just choppiness. Right? It's just choppiness. And I don't want to trade in chop. I mean, you can trade in chop, but I want to find the good overall better market conditions. And there's a lot of geopolitical stuff going on this time of year and this year. I mean, same thing with MNQ. Go to ES. Same thing, just a lot of chop. It's actually, the more and more I look at this on the 4 hour and the hour, this is really building a great case for us to run these lows. If you look at the 4 hour time frame, I can see trendline liquidity really being built up right here. And that kind of gives us the idea that, again, we could run these lows. So I wouldn't be surprised if we ran out this high, maybe did it once more and then dropped. So right now, I really just don't have a bias in terms of indices. I want to say things could keep going higher, but it's giving me, the market's starting to give me signs that it could potentially go against us. So again, when stuff like this happens, you need to be, just sit on your hands. If you are not emotionally responsible enough to sit on your hands, then you probably shouldn't be trading in the first place, but you should just be looking for very short setups, right? Maybe you're not taking that trade for 200 points, but you're taking that trade for 30 or 40 points, right? And that's kind of what the week looks like as far as indices go. So I'll stay on for a couple questions, but it looks like that's really everything. So again, I want to be bullish on ES and I want to be bullish on NASDAQ, but I'm starting to see signs that are either telling me confusion or stop. Dollar index, again, we hit our target, but I think there's a world where we could continue to go higher and lower depending on where they're at. So yeah, I could see a world where we continue to go higher. $1 like this. That's again going to cause the euro to go lower. If I'm looking at, I want to look at USD JPY really quickly because we could be going up. USD JPY, we took out that major high. Yeah, I could see a world where there's a lot of consolidation going on. I don't really feel comfortable calling out a lot of things. I think if I had to pick something that I would focus on, at least at this point in the week, it would probably be Euro futures, I believe. Let me go back to that. Yeah, let me pull up the right one. This one, E. Yeah, I mean, I think we could potentially continue to run for these highs. So I think this could be the best trade we could take this week. We'll be looking at this to continue to go lower and really seeing how we react. If we invert, I'm quickly looking at the second fair value gap. So that's again what I'll be looking for. Again, I think Euro futures, potentially GBP USD, are going to be the most easy to trade and recognize this week. GBP USD or 6B1, which is a pound futures. So also inverted that gap too. So if it's me, I would think that we're probably going to continue to go lower this week on Euro futures, and I'll be looking out for that. Again, that's going to be what I'm going to be looking at. So let me stay on for any questions. But again, I'm very, very, very cautious until we get more information going into this next week. But bullish on dollar index, bullish on Euro futures and Euro USD, as well as pound future. I'm sorry, bearish on pound futures and Euro USD. Indices wise, I would like to see them continue to run higher, but we're also just in a huge consolidation period. I'm probably going to be honest, if you see me take a trade this week and I posted in the chat, it's probably going to be on Euro futures. I think that just looks a little bit safer for what I want to do and how I trade. So again, if you guys have any questions, feel free to stay on and then drop them in the chat. But I also will end the call in about 3 or 4 minutes if we don't get any questions. So hopefully this everybody enjoyed this, got something out of it. If you are in the mentorship, again, if you're not in the mentorship and you want to get a little bit of a taste of what a typical kind of Brinks Trades mentorship looks like, look at the free one that I'm putting out on YouTube. And I don't know how long it's going to stay on my page, but you guys should be able to kind of apply a lot of that stuff to your trading as we go along. So hope everybody has a great trading week, and yeah, I'll let you guys go. Peace.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Our sponsor Blue Guardian is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and over trading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.